Greetings. Welcome to another breakdown, another trade recap. This is going to be for the week before last. So I was traveling and I didn't quite manage to record the videos. So I figured, let me just do it now. And with complete transparency, this is how the week went. I was happy with the week. Obviously not at first. The week before that, I had one break-even trade. I had a losing trade. I think actually I had a second break-even trade, but I definitely had one. I had a losing trade. And then coming into the Monday, I was sick on Monday, so I didn't trade. Coming into Tuesday, I took 2 losses. So having a break-even trade where I got wicked out by I think half a pip. And obviously that's quite frustrating because then from there, price went straight to my target. That was the week before that. And then I had a losing trade last Friday. I think that was somewhere up here where I was looking for a breakout trade just to take it up higher into these order blocks up here. And I think I'd entered up here. It was a ridiculous entry. I was so far up in the premium. I don't know why I was buying at this point. I don't think I analyzed properly. But it was something like that where I just got taken out straight away. So it was one of those just unfortunate moments. And that was the Friday before that. So for that week, I was down 1R. It's not a big deal. In the grand scheme of things, it's 1R. We take on the risk when we trade. It's part of the game. Then coming into this week, sick the Monday, Tuesday I come in, get to the charts. We've had this big move down, and I think this was FOMC news that came out. Really good for the dollar. I think it was the employment change was really positive. And so the dollar started increasing and we got this slowdown in price here. And I expected a reversal to come at some point because you always expect price to fill these imbalances. I think I adjusted that, but the imbalance is there. And we always expect price, as you see here, to come into that imbalance. Now, when looking at where I was on Tuesday, my thought was, okay, we've had a slowdown of price, we've met those lows. Unfortunately, I didn't think about the fact that these are equal lows, right? Which is a prime area for stop losses and especially for price to target. Okay, so as price started pushing up here, I thought, okay, cool. We headed upwards. We're going to start filling these imbalances. Let's get into a position. Got wicked out pretty much straight away. Not even wicked out. I got taken out. And then you started to see this bearish order flow coming into the market, breaking down. I think the 15 minutes going to be easier to view this on. I know this doesn't look very neat right now, but yeah. At this point, I was thinking, okay, price has settled a bit. And when price came into my area, we had this slowdown of price. I think I got in somewhere here. Obviously not exactly to the pip here, but you get the idea of where I was trying to get in. We had the slowdown of price and I thought, okay, now we're going to start to see a reversal. And we never did. Got taken off straight away. That meets my rule for the day, 2 trades and I'm done. If I take a trade in the morning, I'm done for the day if it's a winner. If it's a loss, I give myself a second opportunity later on in the day, provided there's a clear setup. Now, I wasn't unhappy with this criteria. We saw that break the structure because that was the last move to the downside, break the structure to the upside, back at the order block, slowed enough price. Cool. We just didn't get it. It's part of it. I was pretty bleak though because I'd started raising my risk now and this had now eaten away a lot of what I had made previously. But then coming into Wednesday, so the next day, let me just break down this trade quickly. So yeah, on Wednesday, we have, okay, let's just look further back, right? Because this can give us a better picture now of what has happened. So we've had, so we've had this big impulsive move down. I'm expecting a pullback to the imbalance, right? I got stopped out along the way twice. Got stopped out, I I think it was somewhere along this leg. Not entirely sure. But coming into Wednesday, we've now taken this low here. So from this order block, we've now pushed through the order block, taking liquidity below at this relative equal lows. Now, having a look at Wednesday, I'm looking at this and I'm saying, okay, I'm so certain we're going up. And I'm at the charts here. It's probably 9:30 South African time. And I can see prices just going to start pushing up. It looks like it's done what it needs to do. It's taken the lows. It's now settled. You start to get that push up in the Tokyo session here. Coming out of Tokyo session, you get a push taking the highs of Tokyo. We've had a pullback taking the low. And so I think we're primed. We are set now to go up. So I entered before I had any confirmation. I think that a lot of it was fueled by the fact that the previous week I had a break-even trade, a loss on the Friday. Then I had a loss the Monday, another loss on the Monday, so 2 Mondays, 2 losses on a Monday. So I was down 3R. I was like, okay, I don't want to miss this move, right? I could have got a much better risk to reward had I waited for that break and retest confirmation on the order block formation here as it breaks the other order block. I didn't, so what? I got in the trade. And this one played out for a 5R profit, which made up for all the losses that I had made previously and more. Coming into Thursday, I managed to catch a trade here, and there's a very simple explanation to this trade. Okay, so simple explanation here of what I was looking for here. Now, we've had this impulsive move to the upside, right? Leaving this imbalance, this fair value gap, this liquidity void. Call it what you will. I don't care about the name. I care about what it represents. And now we've had this breakdown of price. We've had this imbalance on top. Price is now breaking down. Okay. So through London session, we push up a little higher, taking the highs of Tokyo, and then starting to break down, right? We get this impulsive move to the downside, breaking the structure to the left, on its way to come into this order block, completely fill the gap. Okay. So I had marked out this area here as a point of interest. I think it was on the 15-minute where I had it marked out. Yeah, it was a 15-minute order block. And so I was busy watching it around here, and news came out, and mother of all candles started coming out. And I said, if this closes below this order block, I am willing to get into this trade with the same stop loss entry and target that I wanted. And so I had waited for price to close, or waited for the candle to close, and price closed below the order block. I entered immediately, almost came to my stop loss, and then settled down. I'm like, okay, cool, we're going to go now, we're going to drop. Then we had this push up, this second push. And at this point, I'm like, okay, cool, this trade's going to fail. It is what it is. I've made money for the week. Happy days. And it didn't. It started reversing, started going my way. I was very aware of this order block, but the reason why I don't often target past order blocks. I have a reasoning for this time, but you can see I chickened out on this one. My thought process here was the idea that we've come into this imbalance, we've now rebalanced, and we're going to continue lower. Okay. I have a feeling that there's going to be stop losses below here, below there, and we've got this higher time frame for our point of interest that we could run into, which is exactly what we ran into. And so that was my higher time frame bias, right? I then got a little bit busy, and I thought, okay, this looks like it's going to reverse. I don't want to lose any of these profits. I'm up 2.5R, which, mind you, is a very decent risk to reward ratio. Don't let anyone else tell you otherwise. It's decent. Okay. And I was like, okay, I'm okay with this. Let's close it. And from that point, once again, I didn't stick to the trade plan, which seems to be a common theme of mine. And it's something that I do note in my journal, and definitely something that I want to avoid doing consistently, right? I want to now follow my trade plan consistently, because I found that not following my trade plan has cost me more money in profits than it has saved me in losses. So just another lesson on stick to your plan. And I'd closed it there. Price then continued through with that higher time frame bias. So there's always more weight on the higher time frame, and you need to keep that in mind when you trade. Sure, we look for entries on the 5 minute, the 3 minute, the 1 minute. Cool. But let your 15 minute, let your 30 minute, let your 4 hour bias control the narrative of where you want to end up. So we want to look for higher time frame, points of interest, areas where we want to get into the market, where we can see the market going to, and we want to get into it when a price comes into those areas, and then we want to get the entries on the lower time frame riding through to those higher time frame targets. So I hope this video brings a bit of value to you. I hope that you enjoyed it. If you did, give it a like, give it a subscribe, and I hope you guys have a wonderful trading day, trading week. Remember, control your risk. That's all you can do, and stick to your plan. Super important stuff. I'll see you back here for the next one.